Stephen here from Share Navigator with a quick technical update on the S&P 500. So you can see yesterday a very ugly day in the market, down 2.37%. And you're looking at a 1-year daily chart here. We've got 4 moving averages on the chart. We've got your 10 and 20-day moving average, which is represented by the red and yellow line. So you can see last week they crossed to the downside, where the 10-day crossed the 20-day to the downside. That was a bearish signal. And then yesterday we got a crossover of the 10-day and the 50-day. So this is indicating that the short-term momentum is obviously down. You didn't really need a moving average to tell you that. But it's nice to see it in a graphical format what's going on. So those moving averages are now going to act as resistance. So you can see here the 10-day is at about 3,300. So the market could rebound percent today and still be in a downtrend. So it's important that you're aware of that. A key area of support, and one good piece of good news for the bulls, that yesterday's sell-off did not take out the low on Monday. So that's one ray of hope for the bulls. But I think some of the longer term support is at that 3,200 level. So I do think we probably get a test at that 3,200 level. And if we don't hold that 3,200, this line here, I think we're down to the 200-day moving average. And if we draw our Fibonacci's there, you can see that kind of lines up really well as well with our Fibonacci's as well down here. So I do think 3,100 is a key support level, and I do think it's quite possible we reach there, but that 3,200 level has to be breached first. So I'd expect a bit of support, maybe a bit of buying to come in at 3,200. If the market can't hold that level, then I think we go lower. It's important really as well to take in the Nasdaq when you're looking at the S&P 500 and have a look at what's going on there. And it's quite a similar story in terms of moving averages and not taking out the lows of Monday. But you can see here as well, there's a lot further to drop to that 200-day moving average. And that would be a big concern, that, you know what, the Nasdaq could have over a further 10% to fall from here, really to go down to those support levels. And if you think about the Apples of this world, we'll show you a chart there now. The Teslas, they've dragged those indices up, and those charts look pretty ugly as well. You know, Apple looks like it could fall another 6-7% from here. You're talking about maybe that's going to have a massive impact on the S&P 500 as well. So just right now, unless technology gets a bid again, I think we kind of go lower. And just looking at that, we did a post in our members area and we looked at the sector returns over different periods of time. So over the last month, so the last 1 month of trading, the S&P has been down 4.7%. But if you look at technology, you're down 6%. Communication services down 5.5%. Energy is getting slammed, but energy has been slammed all year. Over a more recent period of time, technology hasn't done too bad actually in the last 5 days. So maybe the selling in tech is starting to slow down. You know, I know Tesla kind of rebounded heavily recently, only to sell off in the last 2 days. So maybe Tesla's having a major impact here. And then down over just yesterday, again, you can see it was technology that took the biggest hit along with energy. And just to kind of bear that out over a 6-month period, you can see that over 6 months the S&P is up 45%. You can see IT and materials, consumer discretionary, all of these have performed really well. They've outperformed the indices. So the positive of that is that whilst there is a sell-off in IT, in the medium to longer term, it's still trading well above the averages there. A bear would look at that in another way. He'd say, well, that means it has to come down a bit more in order to kind of come in line with the S&P 500. So it depends what way you look at these things as well. But it's clear to see that the recent rotation is occurring, and it's occurring really into some of the safer havens, the likes of healthcare, consumer staples, utilities. If you can see that, there was a big rotation into that if you just look at the performance. So just keep an eye on that, folks, that there is a rotation going on at the moment out of tech stocks. Is it over? That's anybody's guess. But that's going to have an impact as well on the S&P 500 and how it performs. So just in summary, 3,200 is now a critical level. Even if this rebounds 3 or 4% from here, we're still in a downtrend, a short-term downtrend. And if we can't hold 3,200, we're going to 3,100 at a minimum. Okay, this is Stephen from Share Navigator with a technical update on the S&P 500. Thanks and bye for now.